All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So I'm going to go ahead and get the bias chart together, and we're going to start doing our analysis. So let's get to it. You know what? I got to fix my TV. Hold on real quick. Just give me a second, guys. All right. Something's up with my TV. I can't. There's like a menu item that won't disappear on my screen. It's like, yes, I know it's HDMI. Just please move it. Okay, there we go. All right, it's fixed. You can't see it, but it's something that was annoying me to no end this morning. Okay, it's just annoying me to look at it, and but it's gone. All right, so here's the euro. Sam said something. He goes, "It's in a Darvis box." I'm not a Darvis box is basically another way to, it's always been in my opinion, to just notice when there's a range, and then a range extension. it's same thing. Basically, we're in just a tight range right now in the euro dollar, and in my opinion, when we break out of this range, it's going to give us a good move. And you can say, oh, look at Darvis box move. It's just a range and range extension. All right. The one thing that I have to point out is that we've broken out on both sides of the range, especially if you were looking at the range earlier. Looking at it like this, we broke lower end of the range, top end of the range, and we're just, basically when we pop out of this, it should be a decent move, and it'll probably be a good 50 plus pip move. We could set up for a bigger false breakout too, which I wouldn't be surprised if we did. But right now, the euro dollar is still stuck in this, I call it 114.50 to 113.25 range. And the 113.25 level is a 38% retracement. We are sustaining gains. And that's the one thing that I have to point out here, is that we're sustaining gains in the euro dollar. Now, if you notice the euro, we have major resistance just above at 115. I mean, if you zoom out a little bit, okay, there's a 1533 right there. So we have major resistance right through here, okay, to that 115 level. So even if we pop to new highs, okay, which is entirely possible here, okay, even if we pop to new highs, I would think that this move would be not sustained. I think a move to 115 would create a reversal. And I'm short the euro. I'm short here at 114.08 from Friday. I shorted it again. I closed it and then I reshorted on Friday, and I just said, well, I'm going to stick with it over the weekend. I'm not really too worried about it. So, looking at the euro dollar, even if we pushed into new highs, I wouldn't even be worried about it. Okay. I think we just have a failure at 115 personally. But right now, 114.50 is resistance, and support is 113.25. Both key. Okay. And again, I have to say that although I think we're in a range, we're at the upper end. We're grinding higher here, and not even grinding higher. We're holding, okay, because we're holding on to the gains. That suggests that we could push a little higher. Oh, one of the other things I wanted to mention, I don't know if you guys saw it over the weekend. The COT reports, the Commitment of Traders reports, show that dollar longs are at their lowest levels since sometime 2014. The lowest amount of dollar bulls right now, right? And that's good to know. It's really good to know, especially when you take the dollar index, and you guys know the dollar index is near its lows of the session, near its it's near its channel lows, you know, that's a big deal, because if dollar longs are so, if dollar longs, they're just, there's not that many and we're near our support, there's a good chance that we could turn around because of that. Anyway, we'll come back and talk about the dollar a little bit later, but so any rally in the euro dollar, I think it's just going to be, you know, this is going to be sold into, personally, right? Let's go to that was the euro. Let's go over to the cable. So the pound has seen a substantial bounce across the board. So we've had the pound dollar bounce off that 120 or 140.50 level again. Saved by the bell, a little false breakdown. Was that Wednesday of last week? We held you know, moves above 140.50, and here we are bouncing back. So the question is, how far are we going to bounce here? And obviously big resistance comes up here, which, you know, we all know, but for today, you know, where are we going to find resistance? Okay, 618 comes in around 142.85. I'm assuming that's going to cap us here. Hourly charts pretty overbought right now. Doesn't mean we can't become overbought-er, but I think that, you know, gains from here are going to be fairly limited. You know, if you're not long the cable already, you know, I don't know if I would go chasing it up at these levels. You guys know I don't like to chase anyway, but I don't know if I would be actively pursuing pound longs at this point, at least not against the, you know, against the US dollar. And if you do, just you have to imagine that upside's fairly limited. All right, now if you want to, I'm going to take this over here. If you want to be on the long side of the cable, why don't you buy dips now down to 141.70? Remember how big 141.70 was last week? Well, on the way back down, it probably is going to be fairly significant. So dips down to 141.70 might be the place to be on the long side, and then resistance 142.85, which is the 618 retracement, right? That's a 618 retracement right here. Now again, the neckline of the head and shoulder pattern takes us all the way back up to 144.50. Will we head back up there? We might, but we're gonna need, in my opinion, we're gonna need help with the euro, right? The euro dollar is gonna have to, really climb substantially for the cable to get back up to 144. So the euro dollar is probably going to have to get up towards, you know, 115 in order to do that. Okay, let's take a look at the Swissy. So the dollar Swiss continued to dip, and dipped all the way down to 95.15 before getting a bit of a reversal. Okay, you can see right down here. Interesting. Try to push out of this. Here, let me come back out here like that. Spike high, rejection in slow markets. Rallied substantially, pulling back. Actually, the dollar Swiss is sitting on pretty good support right now. You guys know I'm maintaining a, you know, long dollar Swiss, and you know, I'm underwater. I own it at 96 cents, but that's all right. Not really, I'm not worried about it at all. I'm actually looking at this channel here. There's the channel low, there's the channel high. So that means that really key resistance now is going to come in right here. It's a spike high here, 95.81, 95.8. So 95.80 is key resistance on the way up. 95.80. Okay, that's going to be key resistance on the way up, in my opinion. And then, because, you know, we also would start making a higher hourly high if we did break that. Yeah, so that's going to be significant. I think we're on support right now, but we can come down a little bit further, sure. But this is obviously pretty key support down through here, 95.15. Okay, and I put us in a range because if you look, like a lot of these charts, we're in a longer term range. Okay, we're just probably near the lower end of the range. All right, let's take a look at the dollar yen. So the dollar yen, let's remove all this stuff really quick. Okay, so here's the dollar yen, and on an intraday basis, and by the way, we're in between fibs. I think I'm pretty sure we are. We're below that 161% extension. (261% extension there doesn't match up. That's how significant that low was, and then see, we're just in between a bunch of fibs. So that it makes it for me. I'm very hesitant to be a buyer here. Okay, because as I've told you guys before, I'm looking to buy the dollar yen now. You guys know I've been on the short side since, well, I've been shorting it since way the hell up here. My last short was really at 121. Well, no, I take that back. 121 because I closed it out right here, and then I reshorted it 113. I guess would probably be my average, 113 and change, and then covered it last week. So now I'm looking to be on the long side of the dollar yen, but not here yet. I've been wanting to buy it at 105. As you guys know, it's a breakout point. 38% retracement comes in at 108.8 or 106.80. These are all levels that I'm now becoming interested in buying the dollar yen. A problem with where we're currently at is we're still a couple hundred pips off there. Now we could end up making like a temporary low in the dollar yen, moving back up towards 110 and then maybe reversing. That seems very logical to me. So does that mean I'm going to get long the dollar yen? No. I try to explain to you guys that concept all the time, that just because I'm not short doesn't mean I want to be long. And this is a perfect case of that. Just because I have covered my shorts and I want to be long somewhere down here, that still doesn't mean that I want to be long yet. Now, the fact that we created some sort of double bottom, I mean, if you want to get long, you can try to do that. But how about if the S&P rolls over from here? Well, let me go ahead and reference this chart again. So here's the E-mini futures. Let's say we stall here, and I was just drawing this earlier, just giving you guys a potential scenario here on a little Gartley, but that's just me thinking out loud, right? Had nothing to do with reality at this point. So let's say, oops, I didn't want to do that. That's all right. Let's say the S&P stops here and reverses off of this resistance. Well, what do you think is going to happen to the dollar yen? Well, if that happens, the dollar yen, we're going to come plowing right through those lows. So, you can try to buy the bottom if you want, or risk below there. I would not risk below there though. That means if you're going long, you got to keep your stops close. Okay. So the lows overnight at 107.62, those are important. 107. I'm just going to write 107.60. It's important. a very important support for the dollar yen bulls today, because everybody's looking at the same chart. It's not like, we're doing something special. Yeah, everybody sees a possible double bottom, but look, double bottom isn't a double bottom until you take out a neckline anyway. Okay, so we just have support. All we're doing is we're just you may say, oh look, Blake, it's a double bottom. No, it's just support. It's not a double bottom until that neckline gets taken out. It's just support. We could very easily be doing something like this in the dollar yen, forming a wedge and then about ready to plow right through those lows. All right. So like I said, if you want to take on some risk and buy here and put your stops below there, that's great. If those lows right there were on a significant low, like some fib level, some horizontal support or resistance that gives me reason to believe that low is the significant low, that would be something. I just don't see it right now. We're in between a bunch of fibs. So in other words, I think we could go lower. All right. But I know there's plenty of people out there thinking the same thing. Ooh, I want to get long. Look, we created a double bottom. I want to get long. Dollar yen's fallen so much it's oversold. It can't be more oversold than that. Relative strength is divergent, but I'll tell you, if we bounce back a little bit, we consolidate, RSI is going to be right back to break even. That just opens the doorway for more losses. Right? Right now, key resistance is at 109. Any which way you slice it, because that will create a double bottom. I think it's 109.10. Let me double check that. The high 109.09. Yeah, 109.10. This is bearish. Okay, this is significant because if we break that, then we have the good old-fashioned double bottom. Okay. All right. Canadian. All right. Anytime the Canadian wants to stop getting the crap kicked out of it, I'd be happy with that. So the Canadian, we hit 127% extension. Here, let's go. This is like garbage from last week. Let's move that. Move that. Friday, everybody. I say everybody because I got notified by like 2 or 3 of you guys. I mean, and everybody was noting that that F1 or the daily FX was calling for an inverted head and shoulder pattern on the dollar Canadian. I'm like, well, I guess, but it's Friday, so it's like Friday, to try to call some sort of chart pattern on a Friday afternoon is very difficult to do, because what happens on Friday afternoons is exactly what happened on Friday afternoon. This Friday afternoon, nothing. Everything just goes into a lull. So, but I had more people, out of the, 500-600 people listening in Friday morning, I had a few people go, hey, daily FX is calling for a reversal here. I'm like, I don't know. But that's more than normal. Usually I don't get anybody referencing FXCM stuff. But anyway, what we did is we did hit 127% extension. So, and we're holding, the support for right now. So that means that this is significant, 129.50. Heaven forbid we break that. I hope that doesn't happen. 129.50. Scary thing is there's probably a lot of people trying to get long the dollar Canadian down here, which anyway, 30.15, this is resistance, because if we can break that, it's going to take the downside pressure off, in my opinion, because there's the low. So actually it's 113.20, right? I'm going to say it's 113.20. Okay, we have to, or 130.20, excuse me, 1.3020. So to take off the downside pressure of the dollar Canadian, we have to break above that resistance. Then once we do that, that'll take that pressure off. Okay. Canadian. Let's go over the Kiwi. Here is Le Kiwi. Okay. By the way, I'm still, wait, do I still have a short Kiwi in? Huh. I guess my Kiwi got stopped out. I was short the Kiwi. Did I close it on Friday? Oh my God, I have to backtrack now. Hold on, let me double check. Oh, all right. I put my stop right basically right here, and it was I did get stopped out overnight. It was only like a 15 pip loss because I was short at 68. I just didn't want to stick with it. I was like, just keep my stops tied. You know, we shouldn't break above that 618. We did. Crap. Oh, all right. For those of you that don't know, I'm out of my Kiwi short. I probably because I got stopped out. We're gonna reverse now. Like I was short from 68.10 since late last week. Since like somewhere up here, and I just put my stops in above those highs. I must have done that on Friday, I'm thinking. Yeah, because I was thinking last night, I'm like, yeah, I'm still short the Kiwi. And then now I'm not. Well, there we go. Now check it out. No big deal. I don't know if I'm going to re-enter short at this moment. I like the euro coming down though. Check this out. Okay, you see that? Let's remove that for a second. We can always bring that back. All right, so challenging this trend line again. This is at a 78% retracement. So that means today's highs. I mean, if you want to short with stops above today's highs, you can do that. I don't know if I feel like doing that just at this moment in time. But the spike high, you know what? 68.30. I'm gonna put in resistance up here. But you can see we probably will end up rejecting right now. But I'm gonna put up resistance right there. 68.60 is resistance. 68.60 is resistance. Okay. We are in a range. Support. So 68 cents will be trend line support. Should we get down there? Okay. All right, guys. When I come back, we will do the Aussie dollar index, finish up with everything else. So I'll be back in a few minutes. Don't go anywhere. Happy Monday to you. Be back in a few. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Let's go over to the Aussie dollar. All right, so here's the Aussie, and man, look at it. Speaking of a tight range, I mean, look at us get here. Let's delete all this stuff. I'm just getting rid of it. We're in the apex of this triangle. So the good news is, let's get rid of that. The good news is we know a breakout's coming soon, right? Bad news is I don't know which direction it's coming, but the good news is we have a breakout. So I mean, it's coming. So that's where this is where you have to exercise some patience. You notice we're at this is a really good reason. Actually, you know what? I should be shorting the Aussie right now. 75.8. All right, I'm going to short some. I just shorted some Aussie at 75.60. I just shorted some, and I'm going to add if we drop below 75 cents, I'm adding, or below 74.80, right through here. All right, so I just shorted a little bit, and you can keep your stops really tight. I mean, your stops can sit here, below, just even below 76 cents, because if you break below 76 cents, it's going to be a breakout, I think. You see that spike high here? Yeah, maybe above 6. Let me adjust it. Okay. All right. So, you don't have to keep your stops, past 76 cents. I think 76 cents is going to be, resistance. As a matter of fact, I'm going to write that down as resistance right now, because I had to take this all the way up to the spike high here. Okay. Resistance is at 76 cents. We might have, well, here, I'll do it this way. Point, come on. Why are you not working? 0.7680. Oops, 7580. 7580.76. Right, that'll be key resistance up there. We're in a range. Okay. And support will be 75 cents, and then obviously 74.80. So I have to 0.7480.75. Okay. All right. So there you go. Because if this is a bearish wedge, if this is a bearish wedge, I don't mind being short here, but I want to add down here. So I've got a little bit right now short, and if we break below here, then I'll start adding, because that means that we're developing a significant top. Looks very similar to the S&P, doesn't it? Really does, which it should, and it does. Yep, 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 yep. Do you guys know? Do you guys know what that is? How many of you do know what that is? Yep, 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 yep. Yep, yep, yep. It's the yip yips, right? It's the yip yips. Hold on. I was going to be one of these for Christmas, or Halloween. These are the Sesame Street yip yips. Yip, 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 yip. You don't know what the yip yip is? Some of us, that grew up, on Sesame Street. These are the yip yips. So for Halloween, I think I'm gonna go dressed as a yip yip. I love it. Okay. All right. I'm done with that. Where am I at? All right. Dollar index. Okay. So hold on. Okay. So here's the dollar index. Why did this happen? I don't know. Where did my drawings go? I'm not too sure where they went. Scott says, boy, the good stuff we learn here, covering all the realms of possibility. If this is just a boring old currency show, you guys would be bored with me. Yeah, I have to make it interesting. I do. Okay. All right. A little bit bigger. Okay. Now, let's go here. A little bit of this, a little bit of that. And I think we're in a descending wedge. Support is at 94, resistance at 95.10. I don't think anything's changed, right? The same crap numbers we wrote down on Friday, if I'm not mistaken. So where my drawings went, nobody knows. Okay, support 94.00. Resistance 95.10. And we're in range. Okay, so there you go. We're at the lower end of our range. Like I said, the thing about the dollar that you have to be aware of is the COT data came in, just showing that dollars. Here, let me hold on. Let me read something to you. U.S. dollar longs are at their lowest level since spring of 2014. Scale has been tilted. It has been tilted. That's why I would not be bearish the dollar down here. I don't think that's a good idea. That's just me. All right. Yep. Peso. So we broke through this trend line here. It's Friday, so on Friday we just kind of went blah. All right, so let's just remove this stuff. Like I said, technicals are hard to read on Friday because things just die. I have my window open because it's so nice outside. We had a cold front come through in Phoenix. It was, it was like 97 degrees on Wednesday. It was hot. I mean, it was like, hot. I was like, no, it's too early for summer to start. But it was like 69 degrees high yesterday. We had this nice cold spell that came through, so it's really nice outside. So obviously a private jet was just flying out. I live near the Scottsdale Airport, and Scottsdale Airport is just where private jets fly in and out of some military, aircraft too. But if you live in North Scottsdale, we have an airport that's really close. And I live, if you live in Scottsdale, you're going to live kind of underneath it. If you're in North Scottsdale, anyway. Okay. So peso support 1760, resistance 18. That's it. If you want to be a buyer down there. All right. Ziggy put a yip thing together on Twitter. Yip. All right, Norwegian krona. Boy, I tell you. We have this head and shoulder pattern still playing, but it looks kind of similar to the dollar index, doesn't it? Or below that 786 retracement right now. I don't know if I'd play it just yet. I don't know if there's any reason to play it just yet. But if you're short the US dollar Norwegian krona because of the head and shoulder pattern, just be careful if we take out this if we take out this resistance here. Okay. Just be careful we take that out. All right. Um, US dollar, Swedish krona. I don't know if there's anything to really do here either. Friday we didn't move very aggressively, so there's just so much support down here. There's a lot of support down here. I mean, this is another pair. I don't know if I want to get too aggressive with the dollar right now. I'm short some euro. I just shorted some Aussie. I'm long the Canadian. I'm long the Swiss. I don't know if I really want to be long the dollar across the board. But if you guys want to buy the US dollar Swedish krona, you know, because I'm not 100% confident that the dollar is ready to turn. I think it's in a descending wedge. I think it's going to turn. Um, I mean, this support right here would be pretty, I think, pretty key to trade against. So you could be on the long side. Um, you could play on the long side here, and just keep your stops relatively close. You know. Okay. Anyway, I think this is your bias chart. I think we've got everything down for right now, and I'm going to take some questions here.